Welcome to Emperor Estates. In this video, let's break down everything you need to know about assessments in community associations. Assessments are the financial backbone of condominiums, cooperatives, and homeowners associations. They fund essential services from maintenance and security to insurance and amenities. But how do assessments work? Let's start with the basics. Assessments must be collected in advance and at least quarterly for condominiums and cooperatives. The frequency and due dates are usually determined by the association's bylaws and governing documents. Once the board determines the amount owed by each unit, it also sets the official payment schedule. As of July 2021, associations must send invoices or account statements by first-class mail or electronically. If the association wants to change the delivery method, they must notify owners by mail at least 30 days in advance. Owners must acknowledge receiving this change notice, and the acknowledgements are kept in the official records. A payment is considered delinquent if it's not made by the due date in the documents, or by the first day of the assessment period if no due date is specified. Before an account goes to legal collection, a 30-day written notice with a detailed breakdown of what's owed must be sent. This allows the owner a chance to pay without added attorney fees. A sworn affidavit from the board can prove that proper notice and delivery were followed. Once a lien notice is issued, condominium and cooperative owners have 45 days to pay. This matches the 45-day timeline already used in homeowners associations. Now, what about special assessments? Special assessments may be needed if expenses are higher or come earlier than expected, or if a reserve falls short. Unless restricted by the governing documents, the board can approve a special assessment. Owners must receive at least 14 days written notice about the meeting where the special assessment will be considered. The notice must clearly describe the reason, cost, and structure of the special assessment. Once approved, a second notice is sent stating payment due dates and when the assessment becomes delinquent. Excess special assessment funds may be refunded, applied to future assessments, or moved to reserves. Before turnover, developers need majority owner approval to levy special assessments. Let's talk about developer obligations. Developers must follow strict rules for assessment responsibilities in condominiums and cooperatives. In condominiums, owners are assessed based on their ownership percentage of common elements. Developers may be exempt from paying full assessments only if they offer a written budget guarantee. This guarantee must be clearly stated in the documents and have both a start and end date. The developer cannot use other income, like vending or startup funds, to reduce their required payments. If there's no written guarantee, the developer must pay full assessments on all unsold units from the day the community is formed. Let's move to liability for assessments. Owners are always responsible for assessments due during their ownership of a unit. When a unit is sold, the new owner becomes jointly and severally liable for unpaid assessments owed before the sale. You can't avoid assessments by simply not using your unit or the community amenities. If allowed in the documents, associations can charge interest, up to 18%, and a late fee of $25 or 5%, whichever is greater. Delinquent owners may also lose the right to lease their units or face accelerated assessments. The board must maintain a separate assessment account for each unit, recording all payments and balances. Assessment records are part of the association's permanent records and must be kept by unit number. If an owner or mortgage lender requests it, the board must issue a certificate of assessment status within 10 days. Next, income taxes and property taxes. All associations must file annual tax returns, even nonprofit ones. The deadline is usually April 15th. Associations should consult with an accountant to determine the best filing method. A rollover resolution can help reduce tax liability when approved during the annual meeting. Associations that own real property may receive property tax bills from the county. In condominiums, individual owners usually pay property taxes directly unless the association owns additional land. A 2021 law allows associations to represent owners in tax appeals, but owners can opt out. Associations must notify owners of this right and how to respond within 14 days. If an owner does not respond, they will be represented by default. Now let's talk about levying and collecting assessments from tenants. If a unit owner is delinquent and the unit is tenant occupied, the association may demand that the tenant pay rent directly to the association. Tenants must continue to pay until the full balance is paid or the lease ends. The association must also notify the unit owner of this rent redirection. Tenants who comply in good faith are protected from legal claims by the owner. If the tenant already prepaid rent, they will receive credit for that period. Tenants cannot be charged increased amounts without a 10-day notice. Tenants don't gain ownership rights by paying assessments, but they can inspect the condominium declaration. Now, liens and foreclosures. If an owner fails to pay assessments, the association may place a lien on the unit. This lien must be recorded and include all required legal details. Notice must be sent via certified and first-class mail at least 30 days in advance for condos co-ops, or 45 days for HOAs. Once the lien is recorded, it remains valid for 1 year in condominiums and 5 years in HOAs. The association may initiate foreclosure just like a mortgage lender, but foreclosure requires another 45-day written notice before legal action. This notice is essential. Without it, the association can't recover legal fees. A lien may be satisfied and removed once the owner brings the account current. And what if a mortgage company forecloses? Then their liability for past due assessments is limited to the lesser of 12 months of assessments, or 1% of the mortgage amount. If the association itself forecloses and takes title, it does not owe prior assessments to another association. Associations can also petition the court to move stalled foreclosures forward. In summary, assessments are more than just billing. They're the legal, financial, and operational foundation of a successful community. Community association managers must understand assessment timelines, legal notices, tenant collections, developer responsibilities, and lien procedures. Understanding assessments is key to maintaining financial stability and protecting community integrity. Thank you for watching Emperor Estates. Don't forget to like, share, and subscribe to Emperor Estates for more essential KM training. Comment Assessment Mastered if you're ready for the next lesson. Check out our other channels. Emperor, University, Emperor, Artificial Intelligence, Emperor, Science and Fiction, Emperor Nature, Emperor, Aviation, Emperor, Entertainment, Emperor Music/Cam Training, Florida Cam, HOA Assessments, Community Manager/Cam Exam Prep, Emperor Estates.